Good morning, I think. Did a lot of driving last night, so that's all good fun. And I think we need to get a screen up. And let's get into it. And I also had a computer die last night totally. So if you hear me whining and complaining, it's because of that. Welcome to the World Indices. Welcome to the World Indices Speed Webinar for Wednesday, the 18th of March 2015. Well, it's Janet Yellen time. That time of the month where Janet Yellen has her evil way with us. And she gets to set center stage. And the world focuses on what words she will say. And I'm sure there's hundreds, literally thousands of people spying on what they do say in order to take an advantage. Full stop, new line. It's also St. Patrick's Day. And St. Patrick's Day is also a time where the stock market likes to go up. And I didn't realize it was St. Patrick's Day until I heard it on the news yesterday. The US stock market and the US economy switches on because it starts to become summer. And instead of being boring and depressed, the northern part of the US starts to become more active because instead of being snowbound, they start getting flowers and trees and leaves and all sorts of stuff. And Canada also starts to come alive as well. Full stop, new line. So economically, things start to happen. So let's see what happened overnight. Dow Transportation Average, new line. Dow Transportation Average, new line. We see a doji. It basically tells us nothing, takes us nowhere. And if I had my druthers, I'd like to see it break below 9,000 and confirm that this is just still part of a larger corrective pattern, which is a descending triangle, full stop, new line. And there's the chart, and I better go look for some lost souls, I think. What was interesting from this chart is that there was a lot of from this webinar today. There was a lot of there was one extra Monday's webinars came up, and it was a little bit disturbing. And I'm not sure why. So I'm going to be watching out for. I'm going to be watching out for people missing out on the service. In any event, this is a bit of a triangle. It is negative to the downside in pattern. Dow Jones Industrial Average, new line. This did nothing, took us nowhere yesterday. Just fell back into the loop. It's still corrective in nature. It didn't actually break through 18,000, which surprised me. I did think that it would. Full stop, new line. And so I guess it's just a stop loss run. That feels like an ABC pattern to the upside. A breakdown will be below 17,752. Full stop, new line. Clearly an ABC style pattern over the last few days. Now, it may emulate a creeper, but a breakdown below 17,800 indicates lower. Full stop, new line. And it all depends on whether Janet Yellen comes out with the magic words, we need to raise interest rates. Full stop, new line. S&P 500 cash index, new line. Again, this turns weak on a break below 2060. And we notice it's tried 2080. It didn't quite get to 2092. Full stop me line. So it's got signs of not being great. But if Janet issues the magic words, the economy is still weak and there is 3 people still unemployed, then it'll bust clearly through 2095 and break to new highs, full stop new line. So anything above 2095 or 2100 starts to get us shifting to new highs. Notice in this pattern, we're having higher lows, full stop new line. E-mini S&P, new line. If we break this higher low below 2036, then it starts to become negative. A first sign of this being negative is below 2054, full stop new line. You'll notice the futures are slightly weaker than the cash in intent, full stop new line. If we look at the futures on the indexes, you will notice that it's managed a 50% retracement back up to that level, full stop new line. I was working off a 38.2, and that's why we were selling at 2060 and 2057 on our PHG trade. You'll notice also that it still hasn't gone long, full stop new line. So going long is a break above 2076, and that is subject to Janet Yellen's mouth, full stop new line. Did somebody arrive in later? I can see this. I think, Glenn, did you arrive after the webinar start? I'd love to know how that went. Did you use the link or did you come straight in? I need that for some feedback. NASDAQ, new line. Now this NASDAQ chart is something different to the S&P chart, and something different again to the Dow chart, and something again different again to the Dow Transports. We can see a clear one-to-one setting it on old top. So the breakdown point is below 4280, as we have mentioned before, full stop new line. Anything below that starts to be negative. The break-up point is above 4400. Anything above that starts to be positive, full stop new line. If you are long now, you could have your stop loss at 4300, full stop new line. And currently, when we look at the weekly charts, we see basically 2 weeks of decline and so far no more information, full stop new line. That being said, the 2 weeks of decline had some reasonable volume in it, but nothing to break it down properly. Full stop, new line. Volatility index. Just to say, if the Nasdaq looked incredibly negative, then I'd start looking for reasons to sell the S&P and the Dow, but we can't see that just yet. The VIX, new line. Now this one is confused. It still may correct up to 17.57, maybe 20.49, full stop, new line. The drift is still up, and if you are long, you could have a wide stop at 14.17. TBT.ETF, new line. This chart tells us that the bonds have staged a rally and that we can expect $41.75, which is our target area. Full stop, new line. You will note a little bit that the decline has been matched by a decline in volume, and that this is the zone we wish to get into. Full stop, new line. We'll watch that volume and see if we can snap up something. Maybe it hits $42.85 and holds that area, $42.65 as well. Full stop, new line. So we'll be on guard. We'll buy a break above $44.51. We'll just have a stop loss at 43.60. And if that is executed, we'll have a stop loss at $43.60. And if that is executed, we will have a stop loss at $43.60. I must say the cloud doesn't look that fantastic on tbt.etf. GDX.ETF, new line. We still see a negative pattern in the gold market vectors, expecting down to $16. DRYS.ETF, new line. Nothing happened. Learn that. European stock indices, new line. German DAX, new line. The German DAX finally had a decent pullback of sorts. We've seen 1 or 2 days declines in this. So anything more than a 2-day, 3-day proper breaking of lows may signal a bigger correction. It exceeded the 12,000 target, and I'm told that the actual money hit the fan last night, so they bought the rumor and sold the fact. If this does turn into a correction, the first logical area to expect is 11,598 of some magnitude. Full stop, new line. If it does get a little bit more uglier than that, then down towards 11,000 would make sense. The money pump came in and then the smarties took profit. Full stop, new line. Euro stocks 50, new line. Currently, if you are long, have your stop here at 36.40, and maybe it dumps down to 35.64 in a normal market. Full stop, new line. Money pump markets are not normal markets, unfortunately. Full stop, new line. If you've been making good money, you could bank 1/3 or 1/2 and just try and work it with the stop. Full stop, new line. UK FTSE, new line. Far from being the genius child and breaking through 69.50 forever, it didn't. And now it's suspiciously like a flag to the upside, which means if it breaks much below 67.50, you'll see it down to 66.57 and possibly 64.60. Full stop, new line. We can see that the rally point has come back into a bit of resistance, overhead resistance, and so a breakdown below this top here at 6,800 would indicate 67.50 or 6,700, full stop, new line. So the FTSE is sort of okay until it breaks down, full stop, new line. So just have your stop loss down below there, full stop, new line. Italian MIB, new line. It didn't quite make it to Christmas at 23,327. That was our target. And I don't think it's going to die, but certainly a correction down to 21,953 would be possible if it is a normal market, and that's the most likely target in a normal market, full stop, new line. In a weird, wild money pump market, I don't know what that target is. Maybe it's here at 22,183, full stop, new line. Shanghai A shares index, new line. This just keeps on wanting to go. 36.90 target. Stop if long would be below 35.40. Full stop, new line. I'm still recommending having exposure to this one in the long run. Full stop, new line. Hong Kong Hang Seng, new line. It broke up a bit. I even heard Tony Delroy talking about the Hang Seng last night on the way back in the car from Canberra. And he was feigning amazement that the Hang Seng had not gone up much. But really, the bar was pretty good. That he was amazed that the Hang Seng had not gone up while Asia had gone up. Anyway, full stop, new line. Basically, if it can claw its way above 24,300, then it gets more exciting. And if you are not already long, I'd buy it there. Looking for 25,188, full stop, new line. If it does perchance collapse down, then expect 23,512, full stop, new line. If you are buying it on a break up, have your stop loss at 23,827. Full stop, new line. Japanese Nikkei, new line. This was the subject of conversation between Tony Delroy and some guy from Morgan Stanley. And we can see there is a doji up there. It's popped up, and you have to think there's some divergence, and we've had a little fourth wave. So if you wanted a wider stop loss and you were long, have your stop loss below 18,900, full stop new line. If you want a tighter stop loss, have your stop loss at 19,226, full stop new line. I'm not overly bearish, but this is exhibiting some fifth wave patterns that may or may not break down. But if you are long, have your stop there, full stop new line. Australian share price index futures, new line. Contract rollover is coming up on this. And usually that can be a bit of fun and games. It can be a bit of a turning point. For example, over here, it had the low around that time and then went higher, full stop new line. In September, it was just fun and games. In June, it was a few weeks before the low that the rollover was happening. In March, the low happened a few days after the rollover. In December 2014, the low happened just before the rollover. September's rollover was a few days before the top, about 5 days before the top, before a decent correction. So you might want to think about that sort of timing thing that comes in now. Is it a low? Is it a high? Probably you would think it's more likely in low territory, full stop new line. Currently we see a little bit of a triangle, so hopefully we'll get 56.48 to 56.88 on a breakdown below 5800, and that would be a nice area. 57.25 and 56.30 are also numbers that would make sense at around this time, full stop new line. Okay, so I think we've got bugger all PHG trades, but we can see here that our the triangle and probably down into this area here. Now, I'm going to shift over, going to cancel this one, and I'm going to shift over to the other side and go to the webinar now, and we'll go and have a look at the other thing. I'll put up this as a recording. And then we'll get out of here. Okay, so there's a link. Okay, talk to you soon.